People think billionaire investors have access to secret information. They imagine private meetings, hidden formulas, or impossible intelligence. But if you study the world's greatest investors closely, you'll notice something surprising. Their biggest advantage isn't money. It isn't luck. It's the way they think. And once you understand that, you'll realize that learning how to invest in stocks as a beginner starts with changing your mindset long before you buy your first share. Imagine two people with the exact same amount of money. One chases every trending stock, checks prices every hour, and panics whenever the market drops. The other spends time learning businesses, ignores the daily noise, and patiently waits for great opportunities. 10 years later, their financial lives could look completely different. Not because one earned more money, but because one made better decisions consistently. Warren Buffett once said that the stock market is designed to transfer money from the impatient to the patient. That's a simple sentence, but it captures a powerful truth. Billionaire investors don't see falling prices as disasters. They often see them as opportunities. While most people react emotionally, they respond logically. That difference is what separates investing from gambling. Here's what most people miss. Billionaire investors don't ask, "How much money can I make this month?" Instead, they ask, "What will this investment be worth in 10 or 20 years?" That small shift changes everything. It moves your focus away from excitement and toward ownership. When you buy a quality company, you're not buying a lottery ticket. You're becoming a small owner of a real business. Think about planting a mango tree. You wouldn't dig it up every week to check whether it's growing. You water it, protect it, and give it time. Investing works the same way. Wealth grows quietly before it becomes visible. Many beginners give up because they expect instant results, but billionaire investors understand that patience is often the highest return investment they'll ever make. Another powerful habit is continuous learning. Charlie Munger famously encouraged people to spend much of their day reading and thinking. The world's best investors are lifelong students. They study history, business, psychology, and human behavior because markets are driven by people, and people are emotional. The better you understand fear, greed, overconfidence, and discipline, the better your investment decisions become. If you're wondering how to invest in stocks as a beginner, don't start by searching for the hottest stock. Start by building the habits of great investors. Save consistently, invest regularly, learn continuously, think independently, and remember that success in the market isn't about being the smartest person in the room. It's about making rational decisions when everyone else is driven by emotion. The next time you hear about a stock soaring overnight, don't ask, "How can I get rich quickly?" Ask yourself, "Would a billionaire investor make this decision?" That single question can help you avoid costly mistakes and keep you focused on building lasting wealth. If this episode helped you see investing from a new perspective, subscribe for more insights on investment psychology, beginner investing, and long-term wealth building. Share it with someone who's just starting their investing journey, because sometimes the greatest investment you can make is changing the way you think.